Welcome back to All Things Money. I'm David Blain, and today's show we're mostly focusing on some of the taxes that are going to either come back or new taxes starting January 2011. There's essentially three waves. We covered the first wave, which was the expiration of the 2001-2003 tax relief. If you missed the first part of the show, please visit us on the web, www.dlblain.com. That's DLBLAIN.com. And we have archives of the show posted there. Give us a call, 633-0107, or email us at allthingsmoney@dlblain.com. If you have any questions on what we're talking about, my firm is an expert in tax planning, taxation, minimizing taxes. And if you're not doing anything in the year 2010 to get ready for these waves of taxes, I think you're going to be in for a big surprise. I have a CPA friend of mine in another city that does a lot of direct marketing, advertising to get new clients, and he recently did a mailer. He had some pens made up with his name and address and logo and all that sort of stuff, and he stuck them in these envelopes. On the outside of the envelope, in big red letters, he put, "I'm sending you this free pen so to be able to sign the big tax check that you're going to have to write in the year 2011 if you don't call me." And I thought that was kind of a humorous way of advertising. He said he got some good response to it. But it's true. I mean, we're joking about it, but it's true. If you're not doing some planning, you may be in for a big surprise. So we finished the first wave. So now the second wave of tax increases in 2011 comes out of Obamacare. And there are over 20 new or higher taxes in the Obamacare bill. Frankly, I don't think anyone actually knows what all is in that 2,000-page monstrosity. People are going to be figuring out new taxes in there for years to come. But here's what we know right now that are going into effect in January of 2011. First of all is the tanning tax. Actually went into effect July 1st of this year, 10% excise tax on getting a tan. Come on, let's not, punish. Most of the tanning salons are owned by small business owners. You don't see any Fortune 500 companies in the tanning business. To put a 10% excise tax on these small business owners is just ridiculous. And, why the government is getting involved in, every little nook and cranny of our lives is ridiculous. But the tanning tax. The second one, the medicine cabinet tax. Thanks to Obamacare, Americans will no longer be able to use health savings accounts, flexible spending accounts, or health reimbursement arrangements to purchase non-prescription over-the-counter medicines except insulin. For those of you that don't know what I'm talking about, the FSA, the HSA, and the HRA are sort of alternative plans mostly offered at bigger employers, although my company, we have an an HRA, a health reimbursement arrangement. And these are plans that allow the employer or the employee in a tax-advantaged manner to pay for health care. And one of the things that they're allowed to pay for is over-the-counter medicines, such as, cold medicine, cough drops, things like that. Anyway, that will no longer be a deduction under Obamacare. Once again, sort of nitpicking the little guy for deductions. HSA withdrawal tax hike, they're raising the penalty on HSA withdrawals to 20% from 10%. I don't think there's anything wrong with having a penalty for taking it out early. You're not supposed to. But what this does, it's more the IRA early withdrawal penalty is only 10%. So why is the HSA withdrawal penalty 20%? It's ridiculous. Starting next year, there will be a multi-billion-dollar tax assessment on brand name drugs. Like all excise taxes, it's going to raise the price of all medicine, hurting everyone. And so people that are relying on their drugs will pay more, and it's certainly going to filter down. If you think Pfizer is just going to sit there and take this extra tax with not passing it on to other products and services, you're wrong. They will. A big one is what's called the economic substance doctrine. The IRS is now, and I'm going to read this, now empowered to disallow perfectly legal tax deductions and maneuvers merely because it judges the deduction lacks economic substance. This is an extremely arbitrary empowerment of IRS agents. It's absolutely ridiculous. If it's black and white in the tax code, someone should be able to take that tax deduction whether it has economic substance or not. For example, if you own a corporation, you're allowed to have an annual meeting, and if you choose to have that annual meeting in Hawaii, you should be able to deduct it. There's no reason you have to have your annual meeting in your home city. Under this economic substance doctrine, the IRS could disallow that for no other reason than they think it lacks economic substance. It's a big, broad, gray area that now the IRS will have. This is not really a tax increase in itself, but employers are now going to required to put health insurance costs on the W-2. A lot of people think that this is a precursor to be able to tax those benefits later. They're starting to track it. It's going to be on your W-2, so it'll be very easy for them to instantly implement a tax on that because employers are already required to report it. The third wave, we're running out of time here today, so we'll go through this quickly, but the third wave is the alternative minimum tax and employer tax hikes. Once again, if you missed this or you want more information, look us up on the web, dlblain.com, or email us at allthingsmoney@dlblain.com. If they don't do any changes to the AMT, it's going to ensnare over 28 million families next year, up from 4 million. In case you don't know, the AMT is what's called the alternative minimum tax. It's sort of a shadow tax system that if you aren't paying enough tax, the AMT kicks in. Anyway, it was designed to capture the people at the very top. Well, you can see if they don't do anything to change it, it will ensnare 28 million families next year. Small business expensing will be slashed and the 50% expensing will disappear. They can normally expense equipment, computers, machinery, tractors, things like that instead of depreciating it. A lot of that is going away. There's literally scores of tax hikes on all sorts of business. Tax benefits for education and teaching reduced, and the charitable contributions from IRAs will no longer be allowed. So there I've outlined 3 waves of tax increases coming your way in 2011. Make sure you're planning for them. Give us a call if you're not. For All Things Money, I'm David Blain. We'll see you next week, and happy tax planning.
The proceeding was a paid program. The opinions expressed are not necessarily those of WNBU and Inner Banks Media.